So today we're going to touch base on assets. The great news is we know already that we don't need to have a full 20% down to qualify to purchase a home. You can do so with much less depending on the loan program. But you are required to verify that you have enough money for the down payment, closing costs, and in some case, reserves. So what are those? So your down payment is going to be dependent on the program that we choose and the price. So down payment is going to be the percentage that's required of the purchase price that you have to put as down payment. That's your skin in the game. Closing costs are going to also be dependent on a number of things. There's going to be a lot of third-party costs that are involved in the transaction no matter what. You could have homeowners association fees that are required. You could also have other things that are in the contract once we review that would be part of your closing costs. And then reserves. Reserves are money in the bank that you would have after closing left that can serve as like a cushion or some security. So some programs require reserves, other programs don't. So we know you've got the money now. Fantastic. What documentation are we going to require? So the majority of cases, the standard on assets is we're going to need 2 months of bank statements where the money for down payment, closing costs, and reserves are going to come. And those 2 month statements, we need all of the pages of those statements. So if you've got 6 pages of a statement, including the last page being blank, we need all 6 of those pages of the statement. So keep that in mind. Large non-payroll deposits have to be sourced. So your payroll deposits in there, no problem. But if you've got money that you deposited from a sale of something or cash in a safety deposit bank or something like that, they're going to want to know where that came from. All right. The other thing is cash, like I just mentioned, is kind of a no-no in the mortgage industry. They don't want you to pull money that was under a mattress cash or take it out of a security deposit box and then put it into your bank account because you really can't tell where that cash came from. And there's a lot of other issues, not just related to the mortgage industry, that have to be federally monitored there too. So cash is kind of a no-no. We don't want to see deposits of cash in there. Non-sufficient funds notifications on a bank statement. We don't want to see that because that means you've overdrafted. So that would require explanation. So try not to try to make sure you don't have that going on your bank statements. We can use retirement accounts. So if you've got a retirement account, we don't necessarily have to use it for down payment and closing costs. You can if you want to pull the money from that, but you could also use the retirement accounts for the reserve so that you've got money sitting in there, you're not touching it, it's just showing their retirement account. Now with that retirement account, we're also going to need the terms of withdrawal and conditions. So they just want to see that you have the ability to withdraw it in case of emergency or some case like that. Did you know that you can get a gift from family? So if you need something from additional closing costs or additional down payment or reserves, you can get that as a gift from family. Now, there is going to be required documentation from both the donor and the borrower. And depending on the loan program and the situation, we would go over that at the qualification standpoint. All right, so here's a tip. In some cases, there might be a situation where you've got enough money for the down payment, but you don't have enough money for closing costs. And we're going into a market where it's easier to do this. So one of the little tricks of the trade is we could try to get a negotiated contract where the seller can pay a portion or all of your closing costs on your behalf. That way you only need your down payment and then the closing costs can come from the seller. Now, this has to be a willing seller and we have to negotiate it as part of the contract, but that's a way that we've worked in the past and we have a good market that allows it. This could be a great opportunity to get the closing costs paid for by the seller. So it doesn't always work, but if it does, it's a great option or opportunity. All right, so make sure to follow us on social media for helpful homebuyer tips and frequently asked questions. And we appreciate your time today and look forward to helping assist you with the dream of home ownership. Have a great day.